Hi everyone, Emma Davidson here from the Global Value Fund. As you may have seen, the company has just released its full year accounts. Now these can make for pretty dense reading, and so to save you time, I thought I'd hit the highlights with this 5-minute video. GVF has had another good year. While there were significant falls recorded across most asset classes during FY2022, total shareholder returns at GVF were up 5.2%. By comparison, international equities in Australian dollars were down 8.5%, global bonds in Australian dollars were down 9.5%, the US market was down 2.9%, the Australian market was down 6.5%, and the technology darlings of Facebook, now Meta, Amazon, Apple, Netflix, and Google were down 26.2%. The steady Eddie, that is GVF, maintained the final dividend of 3.3 cents per share, fully franked for the half, and the board has guided that it expects to maintain this level of dividend payment. That's 6.6 cents per year for FY 2023, which, if it was fully franked, would gross up to 9.4 cents for the year. That grossed up yield sits at around 8% on the current share price. And remember that 8% comes from a lower risk portfolio than a traditional basket of international shares. Another comment I'd make is around the sustainability of the company's dividend. On page 20 of the annual report, the profits reserve sits at almost 39 million. This means that even if the company made no profits from here on in, it would still be able to pay this level of dividend to shareholders well into 2025. Also in the annual report, and a date to save in your calendar, is the GVF AGM being held in person and virtually this year on the 24th of November at 3 p.m. AEDT. Miles, myself, and the GVF board will all be in attendance in person, and we look forward to seeing as many of you on the day as possible. On page 11 of the annual report, you can see that the company has also put out our official statement on how the company looks at and deals with the topic of ESG, which stands for Environmental, Social, and Governance Responsibilities. To be fair, the values we stipulate in the policy have been in place since our launch in 2014. But given how important this topic has become in recent years, we thought it would be a worthwhile exercise to set out our position in a formal document. Another highlight for me in the annual report is Miles's letter to investors. As usual, his letter is detailed, articulate, and runs through a couple of key themes. One of those themes, and something we couldn't talk about FY2022 without mentioning, is the fact that inflation is at 40-year highs in many countries. Miles covered how we got here and how this inflation panic has impacted financial markets by driving up interest rates, which in turn has led to those large asset class declines, which I discussed earlier. Miles then talks about how GVF fared, and helpfully, the company did really well. GVF's unique investment approach provided investors with shelter in what was a particularly bleak year for most asset classes and investment strategies. Adjusted pre-tax net tangible assets, or NTA, increased by 2.8%. And once again, the biggest contributor to the company's returns over the year was the discount capture strategy, which generated gross returns of 6.1%. Over FY 2022, GVF ran with an average see-through equity market exposure of 37% and with an average see-through bond market exposure of 23%. The company's investment return of positive 2.8% therefore compared very favorably to the equity and bond markets, which, as described earlier, fell by 8.5% and 9.5% respectively in Australian dollars. Miles ends his letter with a few words on the outlook ahead. In the end, inflation will be the key issue that drives asset price returns over the coming years. As ever at GVF, we do not pretend to be able to divine what lies around the corner in terms of market directionality, but rather our process focuses on investing into a diversified basket of global assets and currencies, all purchased at a discount, and then seeking to unlock this value to the benefit of our investors. For our particular investment strategy, the silver lining to the recent market correction has been the fact that it has thrown up several interesting opportunities for us at very favorable levels, a development that will hopefully set us up really well for this year ahead. Finally, one of the most important guiding principles for the team and I is that we remain acutely aware of the fact that the capital we are investing represents your savings. To the extent we can, our process seeks to mitigate the risk of capital losses through diversification and thoughtful risk management, a discipline that we will always adhere to. Thank you to all shareholders in GVF. We wouldn't be here if it wasn't for you. And we hope to see you all very, very soon. Bye.